Well, Chinese fintech giant Ant Group has launched its digital wholesale bank called ANEXT in Singapore. The move marks one of Ant's biggest overseas pushes since its $37 billion IPO was derailed by Chinese regulators in late 2020. Now, it aims to serve small businesses that trade across international borders. And today's soft launch comes after it received approval from the Monetary Authority of Singapore. It also comes days after Greenlink Digital Bank started operating in Singapore. Now, Greenlink is owned by a consortium including China's Greenland Financial and Link Lodges Hong Kong. Well, for more on the digital banking landscape, Associate Professor Hannah Yee-Fen Lim from the Nanyang Business School joins us. Well, Prof, how do you expect these digital wholesale banks to impact Singapore's SMEs? And do you think they would be reluctant to leave, say, established banks like DBS for these digital banks?
Well, I think we are seeing the beginning of a whole new era in banking and in access to credit for SMEs, especially the micro SMEs. Being wholesale banks, they of course cannot serve retail customers with exception of fixed deposits of around $250,000. So these digital wholesale banks will be focusing their efforts exclusively on providing for SMEs and providing value. So I think, one area that they may want to target, and I think they probably will, is an area of supply chain financing and technology services. So, and I think, while we're still in a pandemic, there is much need for supply chain finance technology services, especially to micro SMEs. So it may also be the case that they may not require any collateral, which would greatly benefit micro SMEs in gaining access to credit in order to further expand their businesses. So we're talking about, SMEs and micro SMEs that may not actually have that access traditionally to the larger banks like DBS.
I see. So then both digital wholesale banks, have Chinese parents. Would that mean only Singapore's SMEs that do business with China would benefit?
Absolutely not. The parents really do not impact upon their services at all to the SMEs here in Singapore. And in fact, one of the criteria for selection used by the MAS is the ability of the license holder to serve customer needs and to reach underserved segments of the market. So regardless of whether SMEs do businesses with China is really quite irrelevant. And also another selection criteria was the growth prospects and their contributions to Singapore's financial centre. So I would think that these indicate that the digital wholesale banks are expected to reach many segments and provide widely whilst using and incorporating innovative use of technology. And also these digital wholesale banks had to meet all the relevant prudential requirements and licensing preconditions before the MAS granted them their respective banking licenses. So there should be no concerns about whether they can be trusted, for example, whether their money is safe or anything like that, because they're all they had to meet stringent criteria. So, for example, the digital wholesale banks are required to have a minimum paid-up capital of 100 million Singapore dollars, and they have to meet the same capital and liquidity rules as existing wholesale banks.
Well, Prof, two more digital banks are set to launch, one by Grab Singtel and the other is by Sea. How are these digital banks going to shake up the landscape here in Singapore?
I think we are looking at really exciting times ahead because the incumbent brick and mortar banks will have really tough competition coming up. And in a way, the digital banks may have an advantage as they are not expected to have physical presence such as branches all over Singapore, which means cost savings in terms of rental and manpower costs in running the branches. So the digital full bank license holders are able to also offer deposits, loans, investment products through their online platforms. And I think individuals in Singapore will be happy for the choice and variety that these full banks offer. And again, the minimum paid up capital is 1.5 billion Singapore dollars. So, and really given the recent spate of scams targeting bank customers, I think individual consumers here may want to try out the new digital full banks to see if they offer better technological and other protections. So basically, I think that they will help raise the industry's bar in delivering quality financial services and putting a lot of pressure on the incumbent banks, especially serving the currently underserved businesses and individuals. And it is hoped that these digital banks will further strengthen the financial sector in Singapore for the digital economy ahead, and to ensure that it remains resilient and innovative and competitive. And for me personally, I expect that their low-cost structure and efficient setup and the operating systems could actually help them quickly expand in ASEAN, with Singapore as their base for expanding into other regional markets.
And Prof, how developed is Singapore's digital banking scene compared with ASEAN and, say, other Asian financial hubs like Hong Kong and Shanghai?
I would say that it's fairly competitive, and it certainly takes a very cautious approach, which is highly appreciated by institutional as well as individual consumers and investors.
Well, thank you so much for speaking with us, Associate Professor Hannah Yee-Fen Lim there from the Nanyang Business School.